From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. I'm Nadine Blaney, and I have my special guest host here with me in studio, Mark Gardner from MPC Markets. Before we get to Mark, which I will be bringing you in throughout, okay, if you don't mind, let's get to what the markets are doing as we see the last of the trades coming through. So look what happened today. Just continued selling after the 11:30 mark, and particularly as we made our way toward the close. We had iron ore weighing on this market. We did have Europe announcing new tariffs coming on EVs from China, so that's sort of offsetting some of the positivity that we've been seeing around iron ore. But the banks in the doldrums today, that included CBA down by about 1%. And let's not forget that we hear from the banks starting Friday. So Macquarie reports on Friday. Macquarie was down by 1% today. CBA doesn't report, but we get NAB, ANZ, and Westpac in the coming week and a half or so. There wasn't a lot to write home about today. Goodman Group is one, I suppose, in positive territory. And we'll get to, some of this real grocery gloom. So as you know, Woolworths did come out with an update today. It was its quarterly, but most importantly, they warned about FY25 in general, saying that cost of living making people tighten their wallets, and also, let's be honest, the scrutiny that the grocery stores find themselves in terms of, some of the charges leveled at it by the ACCC. So saying that it's a pretty potent conversation, still having rising costs, but then having consumers really looking for value. I know I do. I look for those sales. I think I've said it on air before. I look for those things that are half price, and when they are, I stock up. I'm like everybody else, we're all the same, trying to save money. The Aussie also in the doldrums, really tumbling off by about 0.3% last time I looked, but down around those 3-month lows. And googly eyes. So we had Google report after the bell, shares pushed higher. It looks as if their spend in AI is bringing fruit, or is bearing fruit, I should say. But that will be the litmus test for a lot of these tech names. I had a number of conversations about this today. We want to see the proof in the pudding when it comes to the investments that they're making in AI. And so far today, at least, Google did not disappoint. Okay, so what do you make of all that, Mark Gardner from MPC? It was a pretty negative session by the end of it.
It was a pretty negative session. I'm a little bit surprised. Woolworths situation, not particularly surprised about. I'm pretty sure the CEO's telling the accounting department to, they don't want to be coming out with chest-beating, optimistic, accounts while they're...
It's in their interest to play things down
Absolutely.
Right now.
So I would expect Coles to probably follow suit. We'd be happily buying the dip here in Woolworths at the moment. I think they're quite cheap. We had Coles on the call today, actually, and Coles probably a little bit higher, the relative value trade there. Woolworths looking a little bit cheaper overall, but... I do quite like that new incoming CEO. She did a great job with the digital department and was one of the best performing departments within Woolworths. And I think that she'll probably parlay that across the entire business overall. It's been it was some initial buoyancy in the lithium sector, and which dissipated over the course of the day.
Yeah.
And obviously slightly less than expected on inflation.
Oh, we're getting ahead of ourselves. Let me run through some of these sectors. And if we take the consumer staples, there's Woolworths, to Mark's point, down by 6%. He reckons it's looking good value. We get Coles' quarterly coming out tomorrow. A2 Milk off by 1.8%. There was a broker recommendation coming through on A2 Milk. I forget it off the top of my head, but we'll get there in the end. Here's a snapshot of the banks. Looking pretty weak. Oh no, there's some more of those consumers. They're the banks down by 1%, as I mentioned, for CBA, NAB, Westpac, and Macquarie off as well. But back to the story, Woolworths, we did see shares down as it lowered those estimates in its for Australian food in FY25. BHP at its AGM, the chairman saying that it's moved on from Anglo American. Had no choice, I guess, and it's going to look for further growth projects. Appen had a good day on market after bringing earnings back into the black in September quarter despite declining revenue. Shares up by 1.5%. And Bega Group slid as its CEO said the company is forecasting very little in the way of price increases for its products, and that it will have to find cost savings and efficiencies to curb those inflationary costs. Shares down by 2.3%. Star dropped after posting an 18% drop in revenue in the September quarter. Shares trading at 25 cents. And Pilbara Minerals, this is what Mark was referring to, climbed today up by 1% despite slashing its FY25 guidance. It's placed its WA plant on care and maintenance as lithium prices continue to, just they're weak, right? And they're chewing into its revenue. Lynas Rare Earths, meantime, reporting declines in sales and revenue as prices for rare earth materials drop off. But Liontown said that it's made significant progress with the ramp-up of production at its Kathleen Valley Lithium project. Shares down by 4.4%. Soraya Resources, though, jumping after securing $227 million in a binding loan agreement with the U.S. International Development Finance Corporation. Still, though, not helping its shares too much, off by close to 0.9%. Back to my guest host in studio, Mark Gardner from MPC Markets. So, anything in that list of corporate stories? We talked about Woolworths, BHP.
Well, it was up at 1.5% on early. I think just obviously the iron ore price dragging it down, and just the general market weakness. I'm pretty surprised. We did have a little bit of a bump on the inflation data, and then the downtrend just sort of continued really overall. But I think a lack of detail from Liontown on costs and things like that probably hurt them a little bit. But I think this sort of clean out of the marginal players in the lithium sector is really long term is going to bode really well for those big projects like Kathleen Valley and Pilbara Minerals and things as well, because they'll be
the stronger will survive.
The stronger will survive, and we are going to need lithium going forward. So I think that Rio's statement about they can't open a mine cheaper than what they're buying it off Arcadium I think that's proof in the pudding. And I think we had pretty similar things with that. I think we've spoken about it before with the iron ore. Like those marginal players get cleaned out. It probably takes maybe 6 to 12 months, and then those prices will start to stabilise and head higher, and those really high quality operations will start to be very profitable again. But we won't see those dizzying heights of 18 months ago. I wouldn't have thought in lithium.
So I know that you want to talk about the inflation read. So CBA changed its call. It was the last man standing, I think, in terms of calling for an interest rate cut in 2024. In the wake of this data, they've changed their call. They're now expecting the first cut to come through in February 2025. Because bottom line, while it's in line with the RBA's forecasts for inflation, that underlying measure is still just too strong.
Yeah, but it does seem to be falling, on that sort of 3 or 4 month delay from the US as well. But look, we were always expecting Q1. We've been saying this for 6 months or more in 2025. Obviously, I don't think we're necessarily out of the woods just yet. I think people will underestimate this, these election promises and election spending and things and the fiscal spending actually counteracting the monetary policy, what monetary policy is trying to do. So I think we could be even early Q2 or anywhere up to June realistically if we keep ticking along. And that's not it's bad for a certain section of the population, but it's not. That means that the unemployment rate's going to be around the low 4s, and we're still ticking along. So it's everyone's got their jobs. So it is a case of be careful what you wish for, because if we start aggressively cutting, it's going to be more than likely because unemployment starts to spike up, and I think that's a far larger problem than mortgage, which doesn't affect everyone. So.
It doesn't affect everybody, and so far, and I know it's not a kind blanket statement, but for the most part, people have been handling it. And we'll get retail sales tomorrow, so it'll show how much people are spending out of their tax cuts.
That's exactly right. I mean, you look at all these consumer discretionary. In any normal circumstances, if we were pre-2007, there is no way on God's green earth we'd be talking about a rate cut. We'd probably be talking about a rate hike. We've all just gotten a little bit used to, very cheap money after the GFC, and I think the market's gotten really used to, are the Fed will print us out of trouble. So I think the Fed's move to keep average, the long-term average rates at a higher level is a smart one in the long term. We really haven't seen any weakening numbers in the States. Particularly, we've had 2 hurricanes on the East Coast as well. The employment numbers have been holding up incredibly, and so I really question whether that 50 basis points was massively
Yes,
necessary.
yeah.
But I got the feeling it was very political, because Jerome Powell now is that he's losing his parking spot at the Fed if Trump gets in. So obviously maybe a bit of a helping hand for the Democrats there in that supersized rate cut.
Okay, so gold, I think we should talk about as well. Minting record highs. I think we're at number 36 this year, are we?
Yeah, which is only half of what the S&P, but I think it's close to about 70 odd record highs this year. But yeah, and we're starting to see pick up in the fringe metals as well. Palladium's had about a 10 or 15% rally in the last week. Importantly, Russia and South Africa, who are part of the BRICS coalition, are 70-odd% of the world's supply there as well. And it's coming off very low levels. But to be honest, I can't really see anything stopping this until, I think it just wants 3,000 now. It was even when we've had situations where the US dollar strengthened over the last month, which is normally very bad for gold, and it's just bulletproof. So, and silver's having a major catch up now as well. I think it's up over 50% in the year. So it's sort of just slightly overtaken gold now. But they're all these, the likes of Northern Star, Newmont, etc. Whilst Newmont had a really poor report a couple of days ago, realistically, it's more of an accounting thing, and the ASIC's going to fix itself up. And if gold prices keep going higher, they're the biggest in the world.
I did notice, even after some of those production reports, and Newmont, as you mentioned, was the disappointing one. There still outperforms in buy ratings on all these stocks because of the gold price. Mark, so we've seen you twice today, once for the call, once for the COB. Is it that we're trying to squeeze as much time in with your beard as humanly possible
possibly,
before Friday?
Yes. So,
tell us what's happening.
Yeah, so we're doing for the last call on Friday. My lovely wife and she's in the cancer rehab game, and with some lovely people from Cancer Chicks, Look Good, Feel Better, about cancer survivors, and so we're raising money for these cancer charities, and it's a wonderful Snapchat filter that my kids found for us, but I'm shaving my head and the beard for the cause. So we've got to that 5,000 mark. It's not quite up to date there, but
you've got to 5,000. Good.
Yes. So
well, I haven't done my pledge yet, but I will.
But yeah, so hopefully we can raise some more, because they're really great organisations which give that support, because we've got, I think, about 30 in the last 20 years, 35% more people are surviving. And obviously, it's not just all over when you go into remission, and you've got to get back to life. So something very close to my heart, my wife's heart, obviously being in the industry and doing what she does. So yeah, it was probably a couple of drinks involved when I agreed to do this, I've got to say. But yeah, it sort of spiraled from there. But so I'll be turning up on Friday. Yes, without a beard for the first time in about 8 years or something like that. So,
look,
a really white chin probably. But,
yeah, I think you'll be a little bit uneven. Look, I will say I've been through something. Yeah, hence why the hair's short. So I've been through it, Mark.
Indeed. So
you go through some awkward phases when you're growing it in again.
Oh well, yeah, that's to come. So there is talk of me keeping the mustache, but I'm not entirely sure whether they'd let me within 400 metres of a school if I did that. So I'll probably leave that alone.
Yeah,
so.
Okay. I will. Well, I'm looking forward to Friday's last call. So, and we'll look forward to that. I'm looking forward to seeing you minus the beard, stash, and hair.
This is the last time I'll have the beard on Honors Biz. So.
All right. Well, Mark, we're 100% behind you. So thanks for that, and thanks for today. Okay, so we've got to move on from that, and I'll get you to the stock of the day. And that was Pilbara Minerals. So Luke Laird from Seneca Financial and Mark Gardner from MPC Markets. Take a listen.
I think they come back. I think Pilbara are on the pulse here in terms of, a pretty strong and positive outlook for lithium longer run. And, you've only really got to look at the Rio takeover of Arcadium recently to see, I suppose, some of the bullishness in the sector, despite, pretty struggling prices at the moment, particularly for those, higher cost spodumene miners.
So, do I take that as a buy then?
Yeah, Pilbara's a buy from me.
Yeah.
I think you're not going to go too far wrong in the lithium space at the moment, particularly among the, the high quality developers.
We're going to need lithium long term. it's just an absolute fact of life. So, but obviously that period, a very painful period of the last sort of 18 months, watching it all come back down again. I think we sort of switched out of those marginal players more than 18 months ago, to be honest, and thank God we did, basically. So and we've held Pilbara for a good chunk of that period and got most of the up run a couple of years ago. So yeah, I think this is long term. It's a great buy.
Let me run you through some of these market leaders, and we do have Weebit Nano up by 5.5%. Data3 did upgrade its outlook to grey mining in the gold space. News Corp and Pro Medicus, what a crew there. All right, let's get to the laggards. And for those of you listening in podcast form, I will remember to say what they're up or down by. Star Entertainment Group down by 6.5%. Woolworths down by 5.8%. Boy, that is really severe selling. Ansell off by 4.5%. Liontown Resources 4.5% lower, and Zipco giving back some of the great gains that it's seen lately and yesterday as well, down by 3.8%. In the small end of the market, we've got Livorto Resources up by 20%. Frontier Digital Ventures also putting on 12%. Flipping the page, though, and the laggards in the small to mid-cap space, Calix off by 13% and Novonix off by 7.7%. So tonight, we do get the ADP employment report. So it's a private report that leads us into non-farm payrolls on Friday. Get some home sales data, as well as quarterly economic growth. So looking forward to parsing that. For any tidbits to talk about tomorrow? Tomorrow here locally, we get the international trade price indices, building approvals. Retail trade is the big one. Sort of touched upon it with Mark, but are we spending those tax cuts? Are we spending those energy rebates, or are we being cautious? And all will come out for the September and September quarter. It gives us volumes as well. We have AGMs still from JB Hi-Fi, Wesfarmers, AMP as well. And we get Bank of Japan policy rates and New Zealand business confidence on the global front. So if you are listening to this in podcast form, don't forget you can catch up with all of our wonderful interviews that we've done throughout the day, including the call on which Luke Laretive and Mark Gardner were guests. And you can do that on ausbiz.com.au. And here's a final look at where this market finished today. Down quite significantly, 0.9% by the time all was said and done. I think that all of the 11 sectors were into negative territory, unless A-REITs just squeaked into positive territory. So that's not a pretty picture being painted today. But look, we'd love for you to join us again tomorrow. We are live from 9:45 a.m.